Hey guys, Scott here. Now, if you live in Australia, housing isn't just something you deal with. It's something you talk about constantly. Barbecues, family dinners, work chats, elections. If you're not talking about housing, what are you actually talking about? And yet, here we are, years into a so-called housing crisis, different governments, different prime ministers, endless announcements, and nothing has actually changed. Prices keep rising. Affordability keeps collapsing. So eventually you stop asking the obvious questions. Not, why can't the government fix the housing crisis? But what if they don't actually want to? So stay with me, because once you see where Australia's wealth actually sits and who benefits when prices keep rising, this whole thing starts to make uncomfortable sense. Now, here's a stat most Aussies don't realize. Australia is officially one of the wealthiest nations on earth. According to global wealth data, we rank second in the world for median wealth per adult. We are ahead of the US, the UK, Canada, everyone. But here's the twist. That wealth isn't sitting in shares. It's not sitting in businesses. It's not sitting in cash. It's sitting in property. CoreLogic data shows that over the last 5 years alone, Aussie property values are up around 47% nationally, roughly 300,000 added to the median home. The ABS has now confirmed that the mean house price in capital cities is over $1 million. The total value of residential property is above $12 trillion. Now let that sink in. $12 trillion, almost entirely owned by Aussie households. No other asset class in the country comes even remotely close. That's why in Australia, property isn't just an investment, it's the primary store of wealth. Now you have to realize that the entire system is actually built around property. It's not just households. The entire Australian financial system is built on property. The big four banks, some of the most profitable companies in the country, make the bulk of their money from mortgage lending, home loans, investment loans, property-backed debt, which means rising property prices don't just benefit homeowners, they protect bank balance sheets as well. And because banks are so central to the economy, governments are incentivized to keep property strong as well. That's why Australian property behaves differently to almost anywhere else. During the GFC, prices dropped briefly, then rebounded hard. During COVID, we saw the same thing, a short pause, then double-digit growth. Property here doesn't crash easily because too much of the system depends on it not crashing. And let's just talk about affordability for a moment, because this is where things get really brutal. Australia's dwelling price to income ratio is now sitting at record highs. The average home costs roughly 8 times the average income. Sydney is now one of the least affordable cities in the world, second only to Hong Kong. Melbourne, Brisbane, Adelaide, all classified as severely unaffordable. And yet, despite affordability being stretched to the limit, consumer confidence around housing has not collapsed. Westpac sentiment data shows mortgage holders are under pressure, renters are struggling, but house price expectations remain near multi-year highs. Nearly 80% of Australians still expect prices to rise, and when asked where the wisest place to put money is, property still outranks shares. That tells you something about the Aussie mindset around property. They don't like house prices, but they still believe in them. Now think about what governments keep doing. It almost looks like they are going out of their way to maintain the pressure on property prices. First home buyer schemes, shared equity schemes, deposit guarantees. Even the Prime Minister admits these policies are likely to push prices higher.
From today, more young Australians will be able to get the keys to their first home quicker. It will have a minimal impact. There will be a slight increase in prices.
Why? Because they don't add supply. They don't build homes. They don't fix construction bottlenecks. They don't solve labor shortages. They just pull more buyers into the market that's already short of housing. That's why building approvals keep falling. That's why developers aren't signing contracts. That's why construction costs are still 40 to 50% higher than a few years ago. It's not a housing problem. It's a construction and a supply problem. And demand keeps getting fuel poured onto it. Who is doing all of this? The very politicians promised to make housing affordable. This is where forecasts actually really do matter. SQM Research expects capital city prices to rise 6 to 10% in 2026 under its base case. Even without rate cuts, prices are still expected to grow 4 to 8%. That tells you something critical. Interest rates are no longer the main driver. As long as supply stays tight, population keeps growing, and housing remains the primary store of wealth, we will see continued house price growth. So why doesn't the government actually fix this? Well, this is the uncomfortable part. Fixing the housing crisis properly would mean prices stop rising or grow very slowly or fall. That would upset homeowners, investors, banks, state budgets would be affected, super balances will be affected. The majority of voters already own a property, so instead of fixing the problem, we manage it. Enough pressure to justify headlines, not enough disruption to break the system or fix the system. In Australia, housing is treated less like a basic human need and more like a national investment strategy. So when you ask why the housing crisis isn't being solved, maybe the better question is whether it's being protected. Love to hear what you think. Do you believe the government can fix the housing crisis? Or maybe it won't. Drop your thoughts in the comments. And as always, this is your daily property update, your 5 to 7 minute breakdown of what's really happening in the Australian property market so you can become a property insider. Hit subscribe button, guys, so you never miss a video. Take care.